Hello everyone, hi and welcome to the channel of Wall Street Mojo. To know more about this video, lease versus rent, watch the video till the end. And also if you're new to this channel, then you can subscribe us by clicking the bell icon that's given below. Welcome everyone, and today we have a topic with us is called lease versus rent. Now what this topic is all about, we're going to learn the same, and let me give you a short synopsis first. Well, in this topic what we are going to do is we are going to learn first the meaning of what is lease, what is rent. We are going to understand some of the differences like meaning, what the term is, the accounting standards that those are involved, who are the parties that are involved, the considerations that are given to the maintenance, the change in contracts or agreements, offer that goes in the expiry, and some of the key differences in this particular topic. So let's begin today. Lease versus rent. Well, lease and rent aren't same. On the surface, lease and rent seem similar, but there is a major difference between both of them. So what exactly lease and rent is all about? Let me just bifurcate here. Well, when an asset is given on lease, the responsibility of the maintenance lies on the lessee. That means when a business takes an asset on lease, the responsibility of the maintenance lies in the business. On the other hand, when the asset is, let's say, rented, okay, then in that scenario, the responsibility of the maintenance lies on the person who rents such asset or the property. So in this tutorial, we will go through the comparative analysis of lease versus rent. So let's begin. We are going to understand this. Even on the surface, it seems renting and leasing are similar, but they are not. In this tutorial, we will look at difference between them with the help of the infographics first. Well, leasing is entering into a contract with lessee for a long period to use an asset or a property, while rent is entering into agreement with a tenant for a certain period to use an asset or a property. Here, the contract is with the lessee for a longer period, and here for a certain stipulated period, okay, to use the property. The term, usually it is for the long term, here it is for the short term. The accounting standard AS 19, that is the accounting standard number 19, now Ind AS comes into picture, and they are based on AS 19. Here for the rent, there is no such accounting standard that comes into picture. That goes by the renting agreement, because every renting agreement have their own norms. They want to put down their own clauses, so it depends upon the same. There is no stipulated work. Now the parties, here it's lesser and lessee. Here's the landlord and the tenant. It's like, you're buying a house and you are the tenant. The person from whom you are renting the house is your landlord. Here the lesser and lessee, it's like, let's say lesser is, let's say, Lufthansa Airways. So Lufthansa Airways is the lessor here, and the lessee is, let's say, General Electric or probably Boeing, who is leasing that particular, or Macquarie, who is leasing such assets. Now, the considerations that are considered: the monthly installments are paid for the lease monthly. A rent is paid monthly, quarterly for using the property or assets. The maintenance: the responsibility of the maintenance asset lies on the lessee, while in renting, the responsibility of the maintenance of the asset lies with the tenant. The change in the contract or agreement: once the contract is signed, there is no change in the contract for the fixed period of time, let's say for the 10 years. So there is no change. There is no alterations that you can do. Here, the changes in the agreement anytime, whenever they choose to go for. Usually it is for 1 year, but if you want to change, then you can redraft it and you can change it. Now, the offer at the expiry. Once the term is over, they will ask to purchase the asset. This is basically a finance lease where once you pay the last installment, once the term is over, the asset belongs to you. And there is no such offer that is given to the tenant by the landlord over here. Once your term is over, you need to leave the place. If you want to stay, then probably there'll be an inflation in the renting part. Well, this was the difference between lease versus rent. Now let me take you to some of the key differences. See, there are many differences between lease versus rent. Some of the key differences that stands out here is that lease is taken when a business does not have ample fixed capital. Lease is taken when we do not have ample fixed capital to buy an asset, like engines, landing gears, planes. When they buy it, they don't have this high level of money to buy such planes. So what they will do, they will go and buy those assets for the fixed tenure, for the fixed lease, right? So there is one operating lease and financing lease. So they'll buy it at the financing lease, that after the term is over, the asset belongs to you. Here, this is sort of an operating lease. lease. This is finance lease. This is operating lease. Renting over here is basically after the term is over, your asset belongs to the landlord himself. The leasing contracts have two parties, the lessor and the lessee. The rental agreement has two parties, landlord and the tenant. Leasing, okay, is usually done for the asset or the equipments. Renting is mostly done for the properties or land. In leasing, the service and the maintenance are done by the lessee when he or she takes the equipment on lease. In renting, on the other hand, the servicing and the maintenance are done by the landlord, even if the tenant takes the property on rent. Here, the leasing is done for the fixed period under terms of the conditions are predetermined and the contract are made by taking the mutual acceptance. In renting the agreement, the terms and the conditions can be changed any point of time. In leasing, an offer to purchase is given on the expiry of the leasing contract, and here there is no such offer given on the expiry of the renting agreement. Well, I hope you have got a fantastic idea of what we are talking about here. So, overall, you may have got an idea that what lease and rent goes about. Lease and rent, they both are different, but to a layman, they stand similar. And that's why it is important to go deep into lease and rent concept and understand even if the major difference between leasing and renting is who needs to do the maintenance and the servicing. So there are other differences too. And even if the two parties are involved in the contracts, the roles of each party are different. For example, in leasing contract, both the parties have what you call as the equal rights, right? That is involved. For example, leasing contract, both the parties have equal rights, but in the renting agreement, the landlord has more power than the tenant, though both can decide to go out of agreement whenever they want to. In a simple way, over here, I'll give you an example quickly that in let's say there's a company called Jet Airways, or I won't use that. Lufthansa, let's say, is a lessor who is buying a plane or engine from a leasing company, let's say Macquarie. Now, Macquarie is the lessor. He is the lessor. Lufthansa is the lessee. Here, Lufthansa buys, let's say, for 5 years, for 10 years, usually the term is higher, from Macquarie. So, all the expenses, probably maintenance, Lufthansa will have to bear, not the Macquarie. Lufthansa will bear everything. Lufthansa will take depreciation also in its books of accounts. And after on the 10th year of the last installment, the asset belongs to Lufthansa and not Macquarie. But here, the renting is something like this. Again, I'll just take the same example here. But the only thing is that here, the asset is taken on rent. That is what we call as the operating lease. So here, Lufthansa takes the asset from Macquarie, saying that I am not going to buy in future, but what I will do is that Lufthansa is saying what I'll do from you is that I'll be buying it for, let's say I want the asset for 5 years of time span, and once the 5 years is over, what will happen is that post facto the asset will belong to Macquarie itself. So after the term is over, the asset will belong to Macquarie itself. So all the expenses that Lufthansa incurs for the maintenance, Macquarie have to pay. Macquarie will get all the sort of depreciations uh, in its balance sheet, in its P&L account for the asset in the balance sheet. The asset will be recorded in the books of the Macquarie, okay, and not in the books of Lufthansa. So I hope you have got a fantastic idea of what goes in around in both of them. And well, that is it for now. I hope if you have learned and enjoyed watching this video, please like, comment on this video and subscribe to our channel for all the latest updates. Thank you everyone for joining the video again.